welcome. Thank you for attending our first of the Homebuyer Virtual Seminar Series. And tonight's session is going to be focused on really how much money you need to purchase a home. And what, with any of these virtual sessions, just a few housekeeping details before we get started. So I am going to be keeping everybody on mute as they come in, but please feel free to use the chat feature at any time. If you think of a question, we are going to have ample time at the end of the presentation portion of tonight's session to answer your questions and have some good Q&A. We are also recording this session, and we will share the recording with all the participants afterwards. So if there's anything you want to review or share with someone else, that's going to be available to you as well. And we're also going to make sure that our speakers for tonight, you'll have their contact information. So if you do think of any questions and you want to reach out to one of our speakers directly, you can do that. So you'll be able to contact them. And just to make sure that I get everybody accounted for, I am going to post a link in the chat right now. If you don't mind using that link and just confirming your attendance with your name and your email address so we know you came, and we know where to send your discount on closing costs as part of attending this session, that would be great. So I am going to just pop that in the chat right now. So if you could just confirm that you're here, that would be great. And I'm going to introduce our speakers for tonight. So these two gentlemen, no pun intended, David Gentleman and Martin O'Sullivan, are two of our community lenders here at Main Street Bank. They have a wealth of knowledge in the mortgage and retail lending space, have spent many years working with borrowers. You know, borrowers, whether it's your first time buying or your fourth time buying, they've worked with, you know, different stages, borrowers at different stages of life, and could certainly answer your questions, and they'll be speaking on that tonight. And then just a quick breakdown of our agenda for the evening. So we are going to break down the costs that are associated with buying a home. That includes, you know, down payment, the difference between your closing costs and your prepaid fees, home inspection fees, and any reserve requirements that are involved in the process. So that's just a quick breakdown of what we'll be talking about tonight. And just to level set and understand where everybody is at in the process, because we all are, you know, probably coming at this from different directions. We're going to do a quick poll to get a sense of where you are at in the home buying process. So I am going to post up a quick poll if you don't mind taking a moment to respond, you know, with the closest fit as to where you're at. This is all anonymous. We're all friends here, so feel free to answer truthfully. So I'll give you a couple of minutes to answer this poll here. Where are you in the home buying process? All right, give it 20 more seconds. Five, 4, 3, 2, 1. All right, and let's share those results. It's always fun to see. So we got a lot of people here who are saving money towards buying a house. You're in the right place. So we're going to talk about that. So thank you for sharing that with us. Just gives us a nice idea where we all are at. So at this point, I am going to turn it over to Martin O'Sullivan to talk about his portion for tonight's session.
Thank you, Jamie. As mentioned, my name is Martin O'Sullivan. I'm a community development officer here for Main Street Bank. And I want to welcome you all to the seminar. I'm here to discuss with David, my associate, the funds that are needed to be available to get yourself in position to purchase a property. First, I do want to touch upon a couple of items before we go into that. And first and foremost, you really should be proud of yourselves for signing up for this seminar. This is such a forced learning process, going through the process of buying a home. I don't mean to insult anyone's intelligence at all, but I appreciate the fact that it's like a whole different language. And the terms and the amount of information that you have to obtain. So it's quite the forced learning process. The more information you get, the more educated you are about the process, the easier it's going to be. It's never going to be easy. It's purchasing a home, but the more information you get and learn, the easier the process is going to be. So you should be proud of that. On that note, there's no such thing as a dumb question in regards to asking to try to get information. As my second grade teacher used to say, the only dumb question is the one not asked. So ask as many questions as possible. Understanding that we appreciate the fact that there might be some questions you're not comfortable asking in a forum such as this. And I know David and I are going to be more than happy to speak with somebody after tonight, evenings, weekends, daytime. You've got our contact information. No such thing as a dumb question. The more information you get, the better. So next, one of the things I think that I like to share is some advice that I got before I bought my first home. My grandfather said, Martin, try to make this and keep this a business decision. So much easier said than done. It's only going to be one of the biggest financial decisions you made in your life, but try to keep it a business decision and try to get the emotional parts out of the process. Again, easier said than done, but you have all the time in the world to jump up and down and scream and be happy at the day of closing when you actually get the keys to your new home. But to try to keep this a business decision, try to keep on an even playing even keel as you're going through this process, I really think does help. Lastly, a couple of things that I think you would want to do before you start searching for a home. First is work on a budget. What is the maximum monthly housing payment that you're going to be comfortable paying? Monthly housing payment is broken down to what your mortgage payment, the loan payment is monthly, 1 month worth of your annual homeowner's insurance, 1 month of your annual real estate taxes, 1 month of a PMI or private mortgage insurance payment, which I'll go over in a few moments. And if you're buying a condominium, 1 month of condo fee. That is going to be your monthly housing expense. And one of the things I like to say, when you get pre-approved by a lender, who cares what we say you qualify for? We're not making the payment, you are. You want to make sure you're going to be comfortable with a monthly payment that is right for you. Everyone has to make sacrifices when they buy a home. Everyone has different definitions of what sacrifices are. Some people don't mind eating Kraft macaroni and cheese 4 times a week. Some people don't want to do that. Some people want to live similar to how they're living now. Only you know that. So come up with an idea of what your monthly, gross monthly payment maximum might be. And that payment that figure might need to change. There are many cases I work with people that pretty steadfastly say they want to have this as a monthly maximum payment. And then they find that the houses that they're looking at, to meet their needs, they might need to increase that amount a little bit. When it's a fixed rate mortgage that most buyers and borrowers now obtain, your mortgage payment isn't going up. Your homeowner's insurance payment is going to go up a little bit, probably. Your real estate taxes will go up a little bit. Your PMI payment, private mortgage insurance payment, will go up, but your income will hopefully go up as well. So again, keep in mind what you're going to have as a maximum monthly housing payment that's going to be right for you. And then what you have to do as well, once you work that budget, get pre-approved. You really need to go and get pre-approved by a lender. Most real estate agents won't even show you any homes without you having a pre-approval letter. When you get pre-approved, don't pay any money to a lender. Main Street Bank offers free pre-approvals, and it's a formal weighted pre-approval where we actually complete an application and obtain a credit report and obtain financial documentation to verify that what you are pre-approved for is a solid number. The good thing about being pre-approved as well is you get to see what that monthly payment, what that estimated monthly payment would be, to see if it does meet your budget that you've created for yourself. By getting pre-approved, you also know what the loan amount is that you're going to qualify for, because then that also helps determine how much money you need to have available to purchase a property. So let's go into how much money you need to have to purchase a property. It's broken down into 4 different factors. First is down payment. Second, closing costs. Third, home inspection fee, or potentially a buyer's attorney fee. And then lastly, reserves. So let's go over the down payment first. The down payment, quite frankly, is the difference between the sales price of the property that you agree upon, the purchase price of the property that you agree upon, and the amount of a mortgage loan that you're looking to obtain. If you are pre-approved for a $400,000 loan amount, and you have $20,000 available to you as a down payment, then you know by adding that $400,000 loan amount plus the $20,000 in down payment, the price range that you should be looking at is $420,000. The down payment, again, is what you're going to have available above the loan amount that you're approved for to determine what the sales price range is going to be. Loan amount, down payment, requirements depend upon the programs that you choose. We have a state program in Massachusetts, Mass Housing, that allows you to put as little as 3% of the sales price of the property as a down payment. 3% of the sales price of the property is a down payment. Now, with Mass Housing, there are some income restrictions and there are some sales price restrictions because these are programs that are supposed to be set aside for certain income limits and certain income levels. Now, another thing, masshousing.com is a fantastic site. Even if you're not going to qualify for the Mass Housing program, it's a fantastic site to get information about the home buying process. Masshousing.com. It's fantastic. There are also FHA loans, federal loans, that allow you to put as little as 3.5% down. Most lenders offer conforming loan programs that allow you to put as little as 5% of the sales price of the property as a down payment. You can put 10%, you can put 15%, you can put 20% or more, whatever dollar amount you're comfortable with paying. If you are putting less than 20% of the sales price of the property as a down payment, you are going to be required to pay PMI. PMI stands for private mortgage insurance. It's an insurance that you're going to pay monthly as part of your monthly payment. The PMI of private mortgage insurance pricing depends upon the loan amount that you're applying for and how much money you're putting down. The more money you put as a down payment, the more money you put down, the stronger you're going to be as an applicant in a lender's mind. The thought process is if you're putting $20,000 down, that's a good down payment. If you're putting $50,000 down, you are much less likely to walk away from that down payment and walk away from that home if you run into financial difficulties. So the more money that you put down, the stronger you're going to be as an applicant. PMI, or private mortgage insurance, is priced that way. The less you put down, the higher the PMI payment is going to be. In my opinion, one of the things you really want to try to do is if you can hit that 5% of the sales price of the property as a down payment, I think that should be one of your first goals. With 5% down, some lenders, like Main Street Bank right now, is offering programs that have reduced interest rates with 5% or more down. Interest rates a little bit lower than what you're going to get out on the market because of the fact that Main Street Bank is keeping these loans on our own portfolio and we're being very aggressive with how we're pricing our mortgage rates. In my opinion, if there's any chance you could hit 10% of the sales price of the property as a down payment, that's another great goal because the PMI payment is going to be reduced quite a bit from 5% to 10% down. If you put 15% down, the PMI payment is priced a little bit less expensively, and obviously 20% of the sales price of the property is a down payment. You don't have to pay PMI on a monthly basis. Now, PMI is a fantastic thing, if you ask me. When I have our face-to-face, in-person seminars, I always like to ask a show of hands how many people have heard of PMI, and normally maybe close to half the people raise their hand. And then I ask if anyone has heard anything good about PMI, and you might as well be hearing crickets because people think PMI is horrible. I'm here to say I believe PMI is fantastic. Without PMI, prior to PMI being available, lenders could only lend up to 80% of the sales price of the property. Buyers would have to come up with 20% of the sales price of the property as a down payment. That's a lot of money. Once PMI became available, you can put less than 20% down. Yes, you're paying a cost. What a lot of people don't know is there are actual PMI, there are actual private mortgage insurance companies that we, as a lender, have to present a loan application for them to approve. So there are actual PMI companies, but I think PMI is a fantastic thing. Another good thing about PMI is it can be removed once you have 20% ownership in the property. Once your mortgage balance is 80% or less than the original value of the property, you can have PMI removed as long as you have a solid payment history. The one difference with some of the programs I mentioned is with the FHA, with the Federal Housing Administration loan. PMI does not get removed once you have 20% ownership. That's there for the life of the loan. So down payment, I think, is very important to determine how much money you want to put down, because you're also going to need money available for other parts of the process. So down payment is the first part of the monies that you're going to need to have available. One quick thing that I forgot to mention. I think it's worth looking at the towns and the cities, the municipalities of where you're looking to buy, to see if they may have some down payment assistance programs within that town, within that city. So it's really worth looking into that. So down payment is part of the money that you're going to need. Closing costs is another part of the funds that are going to need to be available to you. My associate David will go over that in greater detail, but I want to touch upon just a few of the things. First of all, closing costs do differ from lender to lender. So you do want to shop a little bit with how the closing costs are going to be presented to you. Another fee part of the closing costs is what are called points. Points as well is something that can be negotiated. You don't have to pay points. Points are something that is going to allow you to get a little bit of lower interest rate, but you have to pay additional monies to obtain that lower interest rate. 1 point equals 1% of the loan amount that's going to be added to your closing costs. So do shop with not only just rate, but with closing costs as well. One last thing, I'm going to touch upon that because David's going to go over this in greater detail. You do have the ability to potentially negotiate to have a seller pay for portions of your closing costs. That would need to be negotiated. You'd want to speak to your buyer's real estate agent to ask him or her if they think it's worth trying to negotiate that, and potentially you can receive a credit at the time of closing from the seller for a portion of the closing costs. They don't have to agree to do that. That is something that would need to be negotiated. But that, if it's agreed upon and if that's part of your transaction, that's less money that you're going to need to have available for closing costs that could potentially pay for more of a down payment. So you need money for down payment. You need money for closing costs. You need money for home inspection or potentially a buyer's attorney fee. Many people try to save money as they're going through the process of purchasing a property, purchasing a home. In my opinion, you don't want to try to save money by not having a home inspection done. A home inspection is done by a qualified home inspector. They're going to take a look and make sure that the property has systems that are working properly, heating system, plumbing system, electrical system. They're going to be able to let you know if there's a potential need for some items to be repaired in the immediate future. It's one of the worst reports that you're going to see on your house, but you want that. You want to be aware of what potential additional costs are going to be required once you purchase this property. Home inspection fees I've seen range anywhere from $350 to $1,000 for an inspection fee, depending upon the size of the property, depending upon what other parts of the inspection are you going to have. Are you going to have a pest inspection or a water test for a well water? On average, for most cases I've seen, home inspections be around $500 to $600 for a standard single family home. You also may potentially have the need to have an attorney represent you as buyer. I like to say there's two different transactions going on when you're buying a home. You're a buyer, you're buying a home from a seller. You need to have personal representation for that. You need to have someone protect you and your interests as a buyer. I like to try to, we're really supposed to stay out of that as a lender, but I like to try to give some advice just because I've been doing this for a while, and I'd just like to be available to have any questions be asked and answered, to be a sounding board. But you do want to have an attorney protect your interest and represent you as buyer. So you're a buyer, you're buying a home for a seller. When you come to, hopefully, Main Street Bank, would love to help you out. If you come to Main Street Bank as a lender, we're going to, as part of the closing costs, hire an attorney to do the title work for your loan application, to manage the closing. That attorney, he or she, is going to do a title search to make sure that any ownership, any past ownership, that nobody has any rights or interest in that property, all past ownership has all been discharged and no rights or ownership is available for your soon to be home. Real estate taxes and real estate taxes and water and sewer liens are all paid and no fees are owed. So the attorney is someone that does a great job for the bank. Main Street Bank has an approved attorney list. Some of these attorneys, you would need to negotiate that with them, but some of these attorneys have agreed that if they get the title work, for the bank, they will agree to represent buyers for free. We allow, what I love about Main Street Bank is we allow you as a borrower to choose the attorney off of our approved attorney list that you would like to use. It makes the process that much more comfortable if you're familiar with who that attorney is. If you choose someone off of Main Street Bank's approved attorney list to do the title work for your loan application, and you want to choose them, him or her, as your buyer's attorney, in many cases, they will do that at no charge. You need to negotiate that with them, but in many cases, they will do that. I've seen buyer's attorney fee be anywhere from $250 to upwards to $1,000, depending upon who the attorney is. So another spot where you could potentially save money and use somebody that you're comfortable with. Lastly, reserves. Reserves is something that I'm a big believer of when you are purchasing a property and you have money for down payment and money for closing costs and money for home inspection fees and attorney fees and such. You want to make sure that you've got some funds available to you. I like to say at least 2 months worth of mortgage payments available to you in case, God forbid, some unexpected expense comes up during the first year that you own a home, that money that you have had saved for the monthly mortgage payment needs to be paid for some unexpected expense. You want to have some reserves available so that you can protect yourself for any unexpected expense for that first year. So that breaks down the funds that need to be available to purchase a property. Where can those funds come from? They can come from checking or savings or money market or investment accounts, CD liquidation. You can get a 401k or 403b or some sort of retirement liquidation or loan. In my opinion, you would want to talk to your advisor for your retirement accounts, but some people look to liquidate those funds. If you liquidate those funds, you're going to be charged taxes immediately once that's liquidated. You're also going to be charged as income for the year for liquidating that. So you're going to be taxed twice, where many people actually take a loan against their 401k or retirement account. And then you're paying yourself back on a monthly basis. You also have the ability to have gift funds available. If you've got a family member that can provide you with a gift to help you with your down payment or closing costs, that's considered to be your own money. So if you know a family member that can help, now's the time to start greasing the skids and being nice to them and loving and tell them how much you care for them. Now, in regards to these funds, oh, I'm sorry, one last thing. If you have a sale of an asset, that can be considered to be your own funds. If you sold an automobile or a motorcycle or an asset, one of the first years that I was here at Main Street Bank, first-time homebuyer sold a rookie Mickey Mantle baseball card as part of their down payments. The wife was thrilled. The husband wasn't that happy, but hey, they had a home. But that can all be considered to be your own funds. We would need to have a bill of sale. We need to see proof that that transaction happened and that you actually got this dollar amount from the sale of that asset. Now, how do we determine what funds you have available? Part of the item, the documents that we're going to be asking for, we're going to ask for proof of assets that you have. We're going to ask for the complete statements for the most recent 2 months. So we're going to ask for the most recent 2 months worth of any of your statements, checking, savings, investment, 401k. If there's any large deposit in any of those accounts that can't be sourced, that can't be determined to come from your income, from a bonus, from a commission, from a tax refund, if we can't determine the source of that deposit, that's not going to be considered your money. So any deposit within a 2-month period of time on your statements, we need to see where those funds came from. So that's the dollar amount of funds that you're going to need to have available. One of the things I want to touch upon just real quick is we talked about home inspectors, we talked about attorneys. Obviously, we're a lender that's discussing this information and trying to help you, to educate you about this process. One of the questions I always have asked of me is, well, who should I choose for a home inspector? Who should I choose for an attorney or a lender? One of my biggest beliefs is you really want to try to get referrals from someone whose opinion you trust, a family member, a friend, a coworker, someone whose opinion that you trust. Ask them or him or her who they used when they purchased their property. Were they happy with them? Will they use them again? Whether it's a real estate attorney, a home inspector, a real estate agent, a lender, ask people who they used. To me, that's one of the best ways to get a referral. And then shop yourself. If you're not fortunate enough to have someone that did provide you with a referral, contact a couple of different places and shop them. Come right out and say, why should I use you? Sell me. Why should I use you? Tell me about what is great about your service that can, products and services that can make me happy about going through you for this process. So I hope this helped. Again, there's going to be a question and answer period at the end of this seminar. David, gentlemen, please break down the closing costs. Thank you.
Thank you, Martin. A lot of great information there. And I just want to say welcome everyone again. Thanks for participating and being here and wanting to learn more about the process of buying a home. Closing costs. I think one of the biggest questions, or I shouldn't say the biggest, but one of the questions Martin and I and other loan officers here most often is, so what are your closing costs? And I'm glad that we've put together this seminar so that we can talk about closing costs, because I think sometimes they can be very confusing. Also, we sort of lump all this cash needed to close into this term closing costs, which is actually not completely accurate. And so what I've done tonight is, with Jamie's help, Jamie did it. I actually didn't do the PowerPoint, Jamie did it, but she put up a sample loan estimate for us that we can go through. Because what's going to happen, those of you that have bought a house before, I think I saw someone who's looking at a second house here with us tonight. But if you haven't, as soon as you apply for a loan, we are regulated by the government that we have 3 days to get to you a loan estimate. So this is one of the most important pieces of documents you'll get as soon as you apply for a mortgage loan with us. And sometimes it can be tricky to read. And I always tell my borrowers, when I send it out, please call me so we can go through it line by line, because there is nothing here that should be hidden, and there is nothing here that should surprise you. And one of the big reasons, just a quick little history, one of the big reasons we have loan estimates and that they have to be given to you at the beginning of the process is because in the past, lenders would just tell people things, and then closing would come and they'd get a closing disclosure and all these numbers would be different, and there'd be things there that they didn't know about from the beginning. So now you get a loan estimate, and that you can compare to your closing disclosure when it comes at the end, and you can make sure that the lenders have not done anything that they shouldn't have done by adding. So what I want to do is I want to go through line by line with you, just briefly, not quickly. I mean, just briefly, not extend it out. And then if you have questions at the end, you can ask those. But I want to make a big difference between what are closing costs and then what the other funds that you're going to be required to have for closing, and what those are and why they're not actual costs. So let's start with Section A. And this is a section Martin said earlier. He said these are loan costs are something you do want to talk to different lenders about, because these do fluctuate. And it's always going to be in Section A where you see some of the biggest fluctuations. So this is Main Street Bank currently right now on all of our loan estimates. You will see a processing fee for $300 and an underwriting fee for $600. That's it. The amount of closing costs that we as a bank collect from you for our services is $900. We do not have an application fee. We do not have a fee to lock in a rate. We have none of those things. This is it. You'll pay us $900. And the nice thing that if you choose to use us as your lender, and because you've been at this seminar tonight, you're going to have $300 taken off of that. So there'll be no more processing fee. You'll only have the $600 underwriting fee. This is where you will see big discrimination in the industry. There will be not discrimination, just big differences in the industry, excuse me. I have seen loan estimates from banks where Section A is $900 like us, or even a little bit less than us, but I've seen it $1,500 or $1,800 in Section A. So that's a cost. That's a cost of doing a loan. Let's move down to Section B. These are also actual costs to to get a mortgage loan. These are all services provided by actual industries that we have to pay. So we're going to collect from you, and then we're going to take that and we're going to pay these people for doing these services for us. The first is an appraisal fee. Most of the time, the appraisal is going to cost $500. This is for a home that you are buying if it's up to $1 million and it's a single family home. If it's over $1 million or it's a 2-family or 3-family and you're going to be relying on rents and there's going to have to be a rent roll taken, then that appraisal fee can creep up. But for the most part, you can plan on appraisal fee from us for being $500. Again, that appraisal fee may be different at different lenders depending on who they're using for an appraiser. The credit report is straightforward. When you make application, we're going to pull your credit. If you are a single borrower, then it would be half of 67. It would be 3350 for a single credit report. This is a sample for 2 borrowers. Then there's a flood certification. What that is, we send out the address to a company that dives in and finds out if the house you're buying is in a flood zone, and then they send us a certificate back that tells us, yes, it is in a flood zone, or no, it's not in a flood zone, and that costs $11 to get that flood certification taken care of. Then we have hazard tracking. Hazard tracking is a service to make sure that insurances are being paid. And that's just a fee that gets done. All lenders have a hazard tracking fee. Same with tax service fee, another fee that's charged in. So we have a service that makes sure property taxes are being paid on all the homes. Then there's a closing protection letter. This is something that the attorney will charge. It's all part of the attorney fees, legal fees for doing a loan. There's an express mail fee, again, because attorneys often are sending things out in express mail. Then we have lender's title insurance. I'm going to come back to title insurance in a second and you'll understand why. So just put a pause on that. Municipal lien certificate. That's what an attorney does when they're exploring your title. They're making sure that the current owners of the property you're about to buy have not had liens placed against their house for not paying certain people or certain services. So they want to make sure we're clear there. The settlement fee is the actual attorney fee. You hear, what are legal fees? Well, $725, we set that as a lender. We do not let our attorneys determine what they're going to charge for this service. We allow them only to charge $725 to handle the closing of the loan. And then the tape survey fee, that's something that happens. Your house is sit on a property. We like to get an official plot plan that tells us that it's legal, it's on the property where it should be. And that's part of, again, the legal fees. On this settlement fee of $725, this is important, and I just want to reiterate what Martin had said. If you engage your own attorney to do your P&S negotiations, that's great. That cost is not going to show up here. So that will be an additional cost to you, so just keep that in mind. However, if you do use one of our attorneys, like Martin said, many of them may do the P&S negotiations free of charge. Others will do it steeply discounted. That fee still won't show up here, but it will be an additional amount of money that you will need to add to this. So just keep that in mind. So A and B, you can see how they come out, and I'm still going to get to lender's title. I haven't forgotten that, but I'm going to wait till we get to one more place before we go there. Let's go over to E. This is sort of the final actual cost of doing a loan section. These are all the fees that Massachusetts charges so that we can record things. Now, it's not broken down here, but I'll tell you exactly where that $455 come from. To record the deed, it costs $160. To record the actual mortgage, it costs $210. And to record the municipal lien certificate, it costs $85. So that's where the $455 comes from. So those are your actual costs. And those are the things that when you get your first loan estimate and you look at A, B, and E, you can count on this much. You can count on those amounts that we give you cannot go up. So when we get to the closing document, that processing fee of $300 and underwriting fee of $6 and all the others have to be exactly what we told you or less. If they're more, we violated a huge regulation and we end up having to pay for those. So that's what you can count on. Now, there could be a reason for an additional charge in A, B, and E, and that could only happen because we find something out that we didn't know beforehand. Okay, so that would be like an example of that this first LE could change would be, for example, if in the title search something comes up that needs to be cured that we weren't aware of, for example, that might be one reason that maybe there's an additional recording fee that needs to go in or something like that. But other than that, you can count on when you get a loan estimate that this A, B, and E sections, that's what your costs are going to be. Now, but that's not the end of the cash you need to close. You also need F, G, and H. And I want to talk about these. And here they are always purely estimates. And what I like to tell my borrowers, they're going to be purely estimates until you get your closing disclosure. And the reason for that is because, let's look at F, homeowners insurance premium. In this particular LE, it was $1,800, which was just an estimate. What we do as loan officers, we understand we've seen so many loans and we've seen so many home insurance policies that we have a rough idea what they tend to be for the value of the home. So we'll put an estimate in here. But you're going to have to pay a homeowner's insurance premium of whatever it is. You're going to call your own insurance agent. You're going to tell them what kind of house you're going to buy. They're going to quote you a price. That's going to be your prepaid for your homeowner's insurance premium. So that's why that number is always an estimate. Might be less than that, might be more than that. But we can't possibly make that accurate on a loan estimate because you're going to be buying your own insurance. And then if you go down to property taxes, same thing. We're going to do our best to find out what the property taxes are as far as, but that won't be completely determined until the lawyers get involved and they verify with the town exactly what property taxes are. So these are estimates. The one that will be very close to accurate is the prepaid interest. So this is fascinating. I want to do this as quick as possible, but one thing that is important to understand about mortgages, which is different than renting. When we rent, we pay our rent on the first day of the month so we can live there for the next month. Mortgages are different. It's called, they're paid in arrears, which means when we pay our mortgage on the first day of the month, we have been paying for the month that we just lived there. Okay, so when you buy a house, for example, and you were to close in September, your first mortgage payment would be November 1st because you'd be paying for October. However, if we're closing in September, we need to be able to collect for September interest of the amount of days you're going to be in the home because we won't have time to get everything recorded and create a bill for you for October 1st. So you'll pay the few days. So this particular loan must have been closing. If they're paying 30 days of prepaid interest, means they must have closed at the beginning of the month. But if you close on the 15th, you'll have 15 days of prepaid interest, 10 days, etc. So that we know the interest per day, we know exactly what that is unless the interest rate changes. But this would be a lock loan. We know that's what it's going to be. However, sometimes the closing date could actually change. So that's why it's an estimate. Okay, so now, so that you can see how that starts to add up the cash to close you need. And obviously a big part of that is the taxes and your homeowner's insurance premium. Then we go down to G. Now, if you're going to escrow, so what escrow means is very simple, that instead of paying your homeowner's insurance every month by yourself or every 6 months or every year, however the insurance company charges you, instead of paying your taxes to your town every 3 months or 6 months, depending on the town you live in, you're going to pay us 1/12 of that every month with your payment. And then when the bills come due, we pay it for you. I think it's a great thing to escrow your tax and insurance. It makes you only have to deal with 1 bill a month as opposed to 3. And so that's why we offer this service to do escrows. So again, this is not a cost of a loan. This is your own money. How I like to explain G to my borrowers is, think of it this way. You have money in one of your bank accounts. You're going to take that money and you're going to put it into a bank account in our bank. It's still your money. It's not a cost. It's just your money so that we have it. When your bill comes due, we're able to pay it. So that's what the escrows mean. Now let's talk about H, because now I said, we'll come back to this lender's title. So here's where we're going to come this as we see it in H. So first, HOA, this is a potential fee that you may have if you're buying a condo. we tell you that some condo associations may charge you money in order for us to get the condo documents from them. And so we have to, ahead of time, disclose that that might happen. I think for me, I see less than 20% of my borrowers having to pay HOA fees. Most condo associations just send you out whatever documents you request. However, the larger ones, especially like if you're buying in Boston and you're buying in one of these condo associations where there's hundreds of condos, typically they're going to charge money for you to get the documents you need. That's why we put the $275 there for HOA. However, if you don't use it, you're not charged it. Martin talked about the home inspection fee. Brilliant thing to absolutely always get a home inspection. We put down $400 here. This is nothing you pay us. We just have to tell you, the federal government makes us tell you that if you're going to get a home inspection, it might cost you money, and it's part of buying a loan. Now, finally, we get to title insurance. Over in B, this is lender's title insurance that's mandatory. Every borrower has to pay for it in Massachusetts. What lender's title insurance does is that covers us as the lender, that if there is a title issue, so simple, this is just a simple example. You have a clear title, but 3 months after you move in or 3 years after you move in, all of a sudden someone comes out of the woodwork and says, actually, I own that house because my great-great-grandfather owned it and he never sold it to anyone. It's always been in our family. So someone made a mistake on title searches. That title insurance will protect us from that issue. Now, you have to buy that. Now come back to Section H. This is an optional cost. Owner's title insurance. You are offered owner's title insurance. And what I tell all my borrowers is please have a conversation with your attorney or the bank's attorney on the value of owner's title insurance. I think it's a great thing, but I'm not an attorney. That's something you should get the advice of an attorney if you should buy it or not. So that's what title insurances are. So as you can see, if you take A, B, and E, you're going to be right around $3,200 plus lenders and title insurance. So there's your actual costs. So around $4,200. Then you're going to have all this additional cash to close. So when you get down here to calculating cash to close, well, first in J, where it says total closing costs of $12,915. That's why I started at the beginning of this, where I wanted to show you that no, we call it total closing costs, but that's not sort of accurate. The actual costs of doing a loan are going to, with Main Street Bank, are always going to be around $3,300 plus lender's title. So in the fours, and then you're going to have all this other cash that's necessary. So when you add it all up, that number gets bigger. And the larger the home you buy, the higher the taxes, the bigger insurance policy you need, that amount can grow. But that's a look at what closing costs look like and where they come from and what they are and why we have them. And I hope that's been helpful. And again, Martin and I can answer any questions in more detail at any time, whether now when we go into a question and answer time, or call us direct, email us direct. Thanks.
All right. Thank you, David. Thank you, Martin. I know we're just up on our time, but I know that the gentlemen here are very happy to stay a little later if you have questions. Before we wrap up, though, I did want to point out that we have a few more sessions. So if there's other questions or if there's another time that you'd like to jump on, we are going to be hosting a series of these sessions around different topics. So obviously tonight's was all about the costs of a loan, and we have a couple other different topics that we're focusing on. All of these are upcoming, and you can sign up online by visiting our website at that address there. But I will open it up if anyone on the call has any questions that they'd like to ask. Please feel free to do so. You can use the chat. You can take yourself off of mute if you'd like. We'd be happy to answer those.
Hi, I had a quick question. What are some of the things you look for in a home inspector? So if you didn't have a referral and you had to search on your own, what are the things that you're looking for in them to make sure that they give you a good home inspection?
one of the things that I think is important is if you do not have a referral, is to now also I'm a big believer that price isn't always the best part of the decision-making process. The cheapest isn't always the best. You do have the ability to take a look at the Better Business Bureau. You do have the ability to ask this home inspector, and they don't have to provide, to ask if they have referrals themselves, if they have people who they have done home inspections for, that you can ask to speak with them to see if they were happy about that process. But again, I just almost like to suggest, to say, why should I use you as a home inspector? I'm a first-time home buyer. I'm not familiar with the process. What are you going to do to help me be comfortable with the home that I have under agreement? Another thing that I like to say sometimes is, if you talk to a home inspector, and this isn't in every single case, but if you talk to a home inspector and they're immediately able to meet with you the next day, sometimes that means they're not busy. If they do say I'm a couple of days out to have an inspection, sometimes that's a good sign that they do have a number of different appointments that they have to take care of. I'm going to be quite candid. The home inspector is one of the most difficult parts of the process to determine, who should I choose? When you're talking to a mortgage lender, you can obviously be comfortable about someone returning phone calls in a timely fashion, to have good rates and a good closing cost. A home inspector is a little bit more difficult. But I would simply ask them, why should I use you? What is the cost you're going to charge us, me? What are the benefits I'm going to have? Are you going to provide me with a home inspection report in writing? Are you going to provide that to me electronically? How long do you take to have a home inspection done? You want someone to take quite some time during that home inspection process. I'm not sure if I helped with an answer, David. If you've got something else, please jump in.
All I would add to that, Martin, is absolutely how important they are. But I also would add that I find that, my wife and I are older, and our kids have this great line for us. They're always like, hey, Google's your friend, because they think we don't know how to use Google. And it's really good. If you go online, you can pick a very specific geographical region in Massachusetts or wherever you're looking, and type in best home inspectors in this area, and you'll get some lists, and you'll be able to read reviews. You'll be able to make some phone calls based off of that. So I would also recommend that highly, because there are some large companies that do some great work, but also large companies that don't. There are some private, single business inspectors that do great work as well, and some don't. So I think there's enough information out there publicly, and also certainly, talk to your realtors. Realtors are going to have those connections as well. So I hope that helps.
That did help. Thank you.
Good.
Great question. Thank you.
Good evening, everyone. My name's Tom Duflo. I work here at the bank. I actually run our retail lending department and our servicing department. And I just, a related topic to the question about the home inspector. I've been doing this for 33 years, and probably the most important person in this transaction, I'm kind of biased other than the mortgage lender, of course, would be your realtor. I highly recommend that you work with an independent realtor, a realtor that's independent of the seller. Quite often you could go to an open house, for instance, and you don't have a realtor with you. So you would end up working one-on-one with the person that's having the open house, and that person happens to be the one that's representing the seller. So you really want to do yourself a favor and go out and get yourself a realtor that you can work with, that's going to be there to represent you through this transaction, and use their referral sources. So if they've been in the business for a number of years and they're a good realtor, they're going to know who the good home inspectors are, and they're going to be able to refer you to a good home inspector. And that home inspector is going to be independent of who the seller's realtor might refer you to for the home inspection. You really want to make sure that you kind of have yourself represented in this transaction, rather than having one realtor or one realtor's office covering all sides of a transaction. And that's how you're going to get the best service, the best independent information, and it's going to suit you well to make sure that you have that independent representation. And not only from a realtor, but that independent realtor that you're doing business with will refer you to an independent home inspector. They might want to refer you to an independent attorney. They might want to refer you to an independent bank. But that removes the seller from being involved in too large a percentage of the transaction. So that would be my advice to you all. And thank you for coming.